Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Wednesday, September the 17th. I'm starting off with Beacon Hill Resources, where there's been an initial bounce off the floor of a falling trend channel from March towards 0.15 pence. That's the end of day close stop loss as we await possible rebound. There's been some bullish divergence in the RSI window, the lower low after the unfilled gap to the downside has not been matched by a lower RSI trace, and really we'd be looking for a filling of the gap towards 0.25 and eventually a push to retest the September resistance zone towards 0.35 pence and the 50-day moving average just above it at 0.36 pence over the next 2 to 4 weeks. Basically, the best indication probably in the near term would be of a buy if we get back above or hold above the 0.17 pence initial support for September, which we've done so far for Tuesday's session. Moving along to Bailzone Mining, and this looks like a sort of a subtle reversal here. We've had this extended base on the daily chart since the middle of August towards 0.5 pence at worst. Possibly just a little bit below that start September, but the higher low at that 0.5 pence level has been helpful in terms of getting the RSI to break through recent resistance at the 30 oversold level, and really that's the leading indicator on upside. What we'd expect now over the next 2 to 4 weeks is an attempt at hitting the 50-day moving average at 1.45 pence, so a decent rebound from current levels. If you're cautious on the shares, maybe you wait for the recent resistance zone towards 0.75 pence to be broken before taking the plunge on the long side. But it really does look as though there's been enough done here after the bear trap below 0.5 pence to give the shares some decent momentum. Moving along to Naboo, and we have a situation where the shares have been slammed really hard over the past few sessions. They've hit the floor of a wide falling trend channel from July last year, heading down to 22 pence, and really that's the end of day close stop loss on the bargain hunting argument at the moment. Maybe you could risk down towards 20 pence or just a bit below that if you don't want to trade the shares so closely. But really, with this latest bounce that we have off a 2014 RSI support line towards the 15 level, there should be a reasonably positive reaction towards a dead cat bounce and the 30 pence level over the next few sessions, even if the shares then revert to the breakdown that we've seen over the past year or so after that. Finishing off with an old favorite, which comes in the form of Range Resources. Here we've seen decent consolidation after the sharp pullback from 2.5 pence in July. The highlight here is the way that on support points we've had the buyers come in above the 200-day moving average at 1.27 pence. So the message at the moment is if you're an aggressive trader, be going long on any dips towards the 200-day line with early and end of day close stop loss, turning this situation bearish. The initial target, the 50-day moving average at 1.76 pence over the next few weeks. Another possible entry trigger would be an end of day close above the 20-day moving average and the July resistance line at 1.53 pence, but it does look as though the latest dip is a higher low above the 200-day line, and hence you can follow the shares to the upside on that basis. That's it from me. More updates at spreadbetmagazine.com.